If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started. That's anchor.fm to get started. We are not financial professionals, and this podcast is designed for entertainment purposes only. We are regular folks who do research and present opinions to an audience in a fun way. Our opinions should not be construed with the views of any organizations we may be affiliated with. This podcast does not represent the thoughts, intentions, plans, strategies of our employers. It only represents the opinions of the authors. If you need specific guidance on your own financial situation, please consult a financial fiduciary professional.
Jerry.
Greg, how are you doing?
Happy Sunday, man.
Happy Sunday. Did you have a good week?
Yeah, it's good. I mean, yeah, yes, overall good week. You know, every week during COVID has its little challenges right now.
Yeah.
But I really look forward to talking with you. So I'm excited tonight.
Oh, I do too. This is one of the most exciting parts of my week that I look forward to all week long.
And do you have I have so many things I want to unpack with you and things I've heard, and I'm pulling at all these different topics, but we have to focus, right? Because we don't want this to be completely useless for people.
I agree. But no, I'm very excited. My internet is upgraded too. So hopefully we will not have any technical glitches, which I edited out last week.
I love it. Hey, well, that's good news. Welcome everybody to our fourth Money Vikings podcast. Check out our blog if you want to do deep dives into other interesting topics about investing, health, and life. But tonight we're going to talk about a couple things. We're going to do, I think we're going to do Iron Condors. It's an options strategy that Jerry and I use. And then I'd like us to dive into some fundamentals of what makes people millionaires. How's that sound for
That sounds splendid. That's splendid. Word I use every day.
That's splendid. How was your week?
Oh, my week was good. Yeah, it was a lot of interesting things going on. The market just keeps grinding higher and higher. I've had some trades that, some did well and some did not do so well. Referencing my futures trading from last week, I did a lot of futures trading in the small exchange, and some of those did really well, and some of those did not. Overall, I'm ahead barely, despite myself, and it's a lot of work and it's tough. I'm still trying to figure out, when I'm trading futures, if I'm a momentum trader or if I'm a mean reversion kind of trader.
Wow, you're blowing my mind with these technical but it sounds like a couple of good things. You're ahead, right, a little bit, which is good.
Yes.
And then you're learning.
Yes.
So
yeah. I've heard the losses being you should take the losses as college tuition. That's
yes.
That's kind of the tuition, the price you pay to learn how to play the markets and trade in there. So
I was talking with my brother about that topic this week. So I'd like to have him on sometime too, as a little guest. As a guest, my brother, and that'd be kind of fun. But we're the same topic. So
yeah.
Well, let's see what other things are. So we got Iron Condors tonight, and then we're going to talk about Millionaire fundamentals. One thing I did kind of hit, one kind of thing that hit me this week is I just got to put this out there, is taking a bit of a step back from social media, news, negative stuff. I kind of had a few moments like that this week where there's a lot going on. It's just such a interesting time in our country because there's so much going on, a lot of tumultuous kind of things. We have an election year that always gets kind of wacky, right?
Yeah.
But I do think for our own, personal health and good, we all have to take a step back sometimes. And one thing I did, Jerry, is I just kind of looked around and I was like, at the moment right now, like if you look around your own life, I'm sure things are probably pretty good,
Mm-hmm.
So just wanted to put that out there, like put out that positive kind of energy, because there's a lot of other stuff out there bringing people down. And, I get it. It's good to be informed, but don't let it bring you down. That's all I'm going to say. Just take a step back, savor the small things. You get it.
Wise words.
Oh, I'm not full of them, but
You're full of it.
Probably. Let's see what I wanted to real quick. A couple things in the news I wanted to just run by with you before we dive into our topics. So Buffett, we got to do a whole show on Buffett, but bought $5 billion of his own, of the BRK, the Berkshire stock back this. Right, his cash pile went from 137 billion to 147. I'm a BRK B investor, as you know, and I'm a Buffett fan. So that was.
So we're talking about Warren, not Jimmy, right?
We're talking about Warren this time, but Margaritaville. Maybe you just let your investments ride and you go to Margaritaville. That might be a good strategy.
Little known fact: Jimmy Buffett actually has more net worth than. No, I'm just kidding.
I think you're onto something though. He is like extremely wealthy. I think I've heard, right? Like,
is that right?
Yeah, you're actually onto something. I don't know if you were like totally joking, but if you look that up, I actually he's so crazy rich. So, but anyway, other interesting thing I read this week in the news was real estate trends, which I'm always following. Folks are wanting more space. They're wanting home offices. The work from home thing, moving away from cities, trying to get out of expensive areas, a little more space, probably more backyard room for the kids.
Yeah.
So that makes sense, right? Everything. So anyway, with that, you want to kick us off with Iron Condors? People that are new to options are probably going, cool name. What the heck is that?
Yeah, let me spread my wings here and I can do it justice. People that are just starting out, Iron Condors may not be the best. It's definitely a cool name, and it's a fun strategy to try, definitely. And I do them a lot for various reasons, over and over again. But they may not be the first option strategy that one goes to. It's a 4-legged option instrument. So you've got your calls and your puts, and you're buying some and you're selling some, and you put them all together. And what you end up with is a neutral trade that assumes you're making the assumption that any stock or ETF that you're trying an Iron Condor on will stay where it is. That's kind of the hope. And what you want is time to go on, and you collect a credit when you enter this thing. Meaning, you can collect $100, $200, $500, and your job is to collect that credit and protect it as much as possible. As time goes by, the stock's maybe going to move, maybe it won't move, but as long as it stays between your boundaries that you set, you will make money, because what happens is the value of the trade that you've done will go down, and as it goes down, you get to buy it back for cheaper and close it cheaper. So, yeah, do you have a question or a comment?
No, that's a great explanation, and I've enjoyed the ones we've done. We've done a few together, and I've really enjoyed them. I think that I kind of have liked that concept I like that concept because I'm really not one to be, it's fine, but like, I don't know what is going to happen tomorrow in the market.
Nobody does.
Yeah. Tomorrow, the market, I don't know what it's going to do. But with the Iron Condors, I thought there was a beauty of that kind of like neutral position. And you were just kind of saying, listen, there's a percentage chance that the price of that stock is going to stay within a range, and you pick that range, right? Depending on how far you spread the wings, right?
Exactly. You pick how far you spread the strikes, and then the wings is kind of a little bit different part of the equation. That's how much risk you want to take, and the wider the wings are, you can make or lose more depending on that too. So you have a lot of room for making adjustments to create a trade that fits you. And I love the Tastyworks platform, and they allow me to drag around the legs of the option, if you will, and see the percentages change as I'm messing with it before I actually place the trade.
Tastyworks does a better job at that, huh? With in terms of against Robinhood, right? I mean, we really like Robinhood, but I would say Tastyworks, it does look a lot better in terms of the way you push those levers, right?
And the information they give you, the way you push the levers, you move the legs around, and what's really nice, I mean, I'm looking at the screen right now, and I'm considering maybe in the future we could do this episode, with a on YouTube with a screen that we can show a little more, because I realize it's very difficult to do this with just audio. But on Tastyworks, you can, as you drag the options, the strikes around, the percentages. The probability of profit changes in real time while you're looking at it. So you can decide, do I want to take a 55% chance of success? Do I want to bring it up to 72? Do I want to go to 80? And like we said before, with options, with selling them, the higher the probability of success, which is, we all want high probability of success here, the lower premium you collect. So you got to get to the point where it's worth your time and effort. But you're not risking a lot at the same time. For me, that sweet spot seems to be about 80% of a 50% probability of success, if that makes sense.
Yeah, it does. And that was another thing I really always liked about these things, because you just could take your own sort of, how you feel about something and go, a lot of people, on a certain amount of money, would they take a 75% chance? Would they take a 65% chance? A lot of people would, if it's $300 or $400,
exactly.
And you have a 75% chance. I mean, yeah, probably a lot of people would, and that's cool. And, guide people to our site, because we do have graphics, right? We have cartoons and infographics.
Yeah, we do. You've made some very nice cartoons. My favorite of all time is the Iron Condor cartoon. I've used that artwork several times. And to prepare for this podcast, I went through the original article that I wrote in 2019, February of 2019, and I revised it because I realized I'd learned a couple things since I originally wrote the article.
Well, check it out, everybody. themoneyvikings.net or moneyvikings.com. There it is.
Yeah.
Condors.
A couple other things I'd like to say just about them before we move on to our next topic is that you can do them in stocks that typically are, much higher price than anybody would be comfortable, say like an Amazon or I don't know, a CMG. Is that the Chipotle CMG?
Okay, good.
Yeah,
Good burritos. Love the food.
Google. You can do them in much higher price stocks, and as long as you set the widths of your wings to an appropriate amount, $100, $200, you can trade those stocks. And it really makes it so everybody can participate. You don't have to wait for a stock split, or you don't have to do it with just buying 5 or 10 shares. You can do these iron condors with much higher price stocks as long as you set your boundaries up correctly.
That is so cool.
A couple other things. One way to think about the iron condor is really, I said it's 4 options transactions, but really you can also think of it as 2 vertical spreads. One on the left side is the bull put spread. So you're collecting a credit for saying that the stock is going to go up or stay at a certain amount above where you're entering those strikes. And then at the same time, you're also creating a bear call spread. So you're betting that the stock stays below the calls on that side. And that's kind of what makes it neutral. And I find it, when they talk about exotic, different types of options transactions, a broken wing butterfly and this and that, spiked jade lizard. Really, if you can identify the basic components of what make up the trade, i.e., two vertical spreads, one bullish, one bearish, it becomes a lot easier to think about.
I always liked them. Yeah. And that's great stuff. Thank you for sharing all that. And should we go on to our next topic?
Absolutely.
Okay. I mean, and here's my segue. So iron condors are awesome. Go to our site, check them out, and see what Jerry's done. But you actually don't need to do iron condors to be a millionaire.
What?
I know you can, but there's so our next topic is about millionaire habits, and this is something that Jerry and I have talked a lot about over the years because there's the famous books like the Millionaire Next Door, right? Remember that book?
Yep.
Very cool book, The Automatic Millionaire. These are books that I actually like to go back to sometimes. But Jerry and I are Gen Xers. So did you grow up with Lifestyles of the Rich and Famous? Remember that show?
Yeah, Robin Leach.
Robin Leach, right? Okay.
Yeah.
So this guy, for the millennials listening, so there was this like British guy, this rich British guy, like kind of like rotund, would go around and do these shows in the 80s of like mega rich people, and it was just like their crazy life and all this kind of stuff. And so I would see this as a kid, and you get kind of in your mind this like cartoon image of like, you're like, oh, a millionaire, like millionaires, that's how they live,
Yeah.
And then years later, I read the book Millionaire Next Door, and which his daughter actually likes our blog. We'll talk about that later. That's pretty cool.
Yeah.
But she comments on our blog a lot. But the Millionaire Next Door, I read that book, and great book. And it's these two guys who did all the research on millionaires in America, and they completely blow away like that illusion that was created on the show. They're like, yeah, that's like 5% of them, but like 95% of millionaires are wearing like jeans and a flannel and some beat up shoes, and you would never know, right?
Yeah.
It's
the truth.
Yeah, it's truth, right? And so what these guys found is that there were common characteristics of these people. And I'll start with like one of the first ones, which is, it seems, Jerry, it seems straightforward, but like if it was easy, everybody would do it, right?
Yeah.
But I don't know if you realize this, but here's a statistic. I mean, only about 3 to 4% of the U.S. population has over $1 million net worth. That's really low.
That is.
Right?
Yeah.
That's 3 to 4%. Okay. But what they found, so the first thing they talk about is these are people that live well below their means. So they make a certain salary, but instead of just like always like maxing out the credit cards and maxing out the vehicles and the Mercedes and maxing out the the bigger house, or in the perfect zip code, they're living below their means. And what that does is it frees up capital for them to do iron condors, right?
I see. Well, they can invest. I mean, it doesn't have to be iron condors. It could be a passive, low-cost S&P Index 500 fund, if that's your kind of thing too.
Exactly. And I hear, the thing I'd add to that, Jerry, and I know you and I are big into that. I would say the other thing too is that people have got to automate this stuff, right?
Yep. Yeah.
You got to automate. I mean, anybody out there, like if you are trying to save or invest, I mean, hey, it's fun to do the iron condors. Okay, we do that kind of stuff, but we have other things automated where we don't have to think about it, because that's I think what really sets most people up for success.
And 401ks are a great example of that. Once you start a new job, I actually think some studies showed that when they changed the default behavior, people would automatically enroll and they would end up saving a lot more. Some people just put it off and didn't get around to it, taking some percentage of their paycheck out and putting it in their 401ks. This is a great example of automation of investments.
Man, yeah. I mean, have you read the and we don't get any royalties for these book plugs, by the way. These are just books I like. But have you read The Automatic Millionaire? You read
Yeah,
that one?
you loaned it to me,
Did I
and
loan that one to you?
after I read that, I kind of went crazy and automated a lot of things. Probably went a little overboard and had to scale back a little, but yeah, no, that's great. That's the way you want to do it.
That book. I was when I was preparing for our show tonight. I was kind of visiting that book because I like to keep some of these books and I put little pencil notes in them. But I opened to this one page, and I'll just read a couple of things it says here that just again good stuff to remember. Number one says you don't have to make a lot of money to be rich, right? People
Mhm.
are always you do have to make a salary. I mean, and I get it. You got to make a certain amount to pay the bills and all that. But I think people tend to think, well, until I make this much, I'm not going to save.
Right.
I think that's dangerous. I think that you should try to save as early as you can. The second thing it talks about, if you automate things, you don't need discipline because most of us don't have discipline, right? Me included.
That's a good point. Yeah. Yeah. I mean,
you
yeah,
know,
we put things off, we procrastinate, we know we should do it, but just, months or years will go by and, we got nothing to show for it. So if there's one action you can take tomorrow after this podcast,
automate.
automate some sort of monthly, weekly, or, every bi-weekly investment that, maybe just puts money in your Robinhood account. Something Robinhood even lets you do it, I believe.
I noticed that recently. It kind of would pop up every once in a while, and it gives me like it's like, hey, do you want to do a normal, $50 a month into, Pfizer or something or whatever,
Yeah.
or whatever. It could be the S&P. So the other one, it said in this book, it says you don't need to be your own boss because you always hear that a lot of times. Like the only way you can become a millionaire is you have to start your own business. Well, not all of us have that in us or have the timing or the idea. You know what I mean? I found that frustrating because I've thought of different business ideas, but I don't know, the timing wasn't right or I didn't have the idea.
Right.
You know what I mean?
Yeah, not everyone has that entrepreneurial spirit or desire, or wants to be a real estate mogul like you are.
Yeah, right. but the point is really good because it means, again, it's like you can if you have you do need a steady job. I get it, you need steady employment, but you don't need to invent the next Apple computer or whatever, or the next hit app.
Yeah.
You know, he talks a lot about his thing in this book is the latte factor. We all know what that means. It's like basically you can build a fortune on a few dollars a day. It really is amazing if you can just get that, like, 5, 6, 10, $20 a day. And if you're consistent and automated, it'll add up.
The latte factor.
He calls it the
yeah. What is the latte factor?
Oh, he's saying, like, he talks in the book about how, like, a lot of people, I have a friend who works at Starbucks, so I know this. People spend a fortune, right? Maybe not right now, but they used to spend a fortune, every day going to Starbucks, and you get a breakfast sandwich, and you get, the coffee, you get the this and the that. I mean, you could be spending $12 before you know it, $13.
That's right. Wow.
Yeah.
It adds up.
So, anyway, I'll stop there. it's not a deep dive into that book, but those were a few of the ideas. Here's another one. I'd like. Yeah.
Please.
I'd like to get your take on this one. So it says, to most millionaires, financial independence is more important than status displays of wealth.
I love it. I mean, yeah, there are people that, they have really nice cars, park them in front of their house, and they're nice. But I mean, I think you and I like to just use cars that get us from point A to point B. Maybe if they're electric, that's cool too. That saves on gas. Of course, you got a higher electric bill, but that's a different episode. Yeah, no, I mean, and clothing, I think both of us kind of fit that mold where we're not trying to keep up with the Joneses, if you will, the neighbors, and have the bigger house, and have the latest iPhone. I'm on an iPhone 7 proudly, and
Look at that. Look at that.
and I love technology. Believe me, I do.
I've mulled this one over a lot over the years, because it's not that, I trust me, I like quality, nice stuff. Okay. Like anybody. Right.
Yeah.
And at the same time, I don't want to live a life. I like to find balance. So I don't want to live life where I'm like denying, myself or my family, just like every little thing. Cause it's like, oh no, that's too expensive. That's that. Cause there's an extreme, right, of everything.
Of course.
But at the same time, I've tried to make choices like here's where we're going to spend the money, and it's the stuff that you value the most,
Yeah.
Yeah. So, find that for yourself. Right.
Totally. Yeah. And I think a lot of it comes down to want versus need. And if you can figure out what you really need versus what you want, that's going to help a great deal as well. And I agree with you on the quality thing. I mean, in many things in life, you will find that you spend a little bit more on quality up front. The widget or device or home, whatever you're buying, will last longer. And if you maintain it, that's an investment. So I think it's good to consider quality. Don't just go for the cheapest item on the shelf. And that goes for beer as well.
That's right. Yeah. And it's funny. You sparked my memory on something, because I've talked with folks about this over the years, and I've met some people too. And again, great people, and I love it when people want nice things, and nice things are awesome. And I've met some folks that it's like, oh, I like Mercedes, and I like, I want to have this, and I want to have these types of clothes. And the one thing I'll talk to them about is like, hey, listen, let's put it down this way. Are you maxing out your 401k? Are you Are you automating your investments? And if the answer is yes, and I'm not giving advice to them, but like if they want it, but if the answer is yes, I'll just say, hey, you know what, you're doing the right thing. Then you want to enjoy whatever it is, and you want to have this kind of thing. But you know what? In the background here, you're doing the saving, you're doing the investing. So you know what, man, you're gonna be fine. Just have at it, right? That's your thing.
Yeah.
It's not judgmental. It's
Right.
just like, so yeah, it's kind of interesting. Let's see. Should we do one more?
Why not? These are fun.
These are pretty cool. Okay. They allocate time, energy, and money efficiently in ways conducive to wealth building. If you don't mind, I think I can sum this one up.
Go for it.
The way I think of it. What I try to think of is assets versus liabilities, right? Mm-hmm. And look at where your cash is going. Okay. Like, where is all your money flowing? And if your money is not flowing into your 401k or into rental properties or things, and it's flowing into the boat and the Mercedes and the clothes and the over the top luxury vacation, that's all good stuff. But you just have to remember, all your money is flowing into things that are not wealth building. So you just have to know that, right?
Yeah. So, every dollar has a job in my book. So
yeah. So, so maybe for a person like that, it's like, hey, get a few of those dollars, flowing back into assets. But
yeah,
anyway.
you definitely want to understand the big picture, where all your money is, where it's coming in, where it's leaving, and make sure that you understand that you're putting some of it in wealth building places. That's up to you where you want it to be, whether you feel like bonds are the best choice or index fund or iron condors, but definitely make sure you allocate some of your funds for wealth building.
Absolutely.
If you can.
Absolutely. It takes time. I don't see, I haven't seen a lot of get rich quick in my life. I've seen a lot of, people that get things and systems set up where over time, things can build. You can target market opportunities. You can do iron condors, and just continue to make your. I love how you discussed last week about having your dollars work for you, like little employees or something.
Little worker bees.
Little worker bees. I love that. Yeah, your dollars are little worker bees. It's really good stuff. So
yeah.
I can't believe how fast the time goes with these shows.
It really does. It really does go by fast. I think it's we've got a lot of stuff that we try and pack in. I would like to add one kind of closing thought, and then maybe you can follow at the end of this thing. But I did want to say, with iron condors and things like that, it's. I just wanted to stress again, it's maybe not the first investment type of thing that you might want to do. Jim Cramer, love him or hate him, I tend to be a fan, but he always advises people that want to get started in investing to at least build up about $10,000 in an index fund before you consider, individual stock investing. And I would expand that to iron condors as well. Definitely establish some sort of base and get that automated thing going every single week, month, or year before you start to do these sorts of other things, because they can you can definitely lose money on these things, and you want to start slow and know what you're doing before you continue. The other thought I wanted to say is, when you do put these things in, make sure you put a closing order in right after you put in the opening order, so you don't have to think about it. And as time goes by, you might be at work one day and all of a sudden you'll get a push notification that says, your trade's closed for 50% of max profit. And that's great. You didn't have to watch that thing. It's very kind of passive once you set your targets and set the trades out. So I just wanted to cover those things because I felt they were pretty important.
Yeah, I love that. I love when you're able to summarize it like that, and setting things up where it's sort of, you've calculated everything and then you kind of don't have to think about it and you let it play out. I'm a big fan of that as well. So, because everybody's got lives to live. We have kids to raise and jobs to do, and so we're not always watching our investments. But thanks for going over that tonight, Jerry. I think people are going to get a lot out of this, and I'm just going to end with, it's a little bit of a tough time out there, so be good to each other. Some folks are struggling. Be kind and listen. And it's always a pleasure talking with my friend Jerry. So,
all right. Well, thank you, Greg, and have a good rest of your evening, and we will talk again next week.
You too, man. Always nice talking with you.
Okay. Bye-bye.
See ya.